Hi, guys. How are you doing today? How are you doing today? It's a Friday. It's a Friday. Welcome day, huh? Best day of the week, they say. But anyhow, here we are. David Etienne here, your certified public accountant. And you recall that yesterday we met and we quickly looked at approximately 10 items that I consider to be not exhaustive, but they are quite pertinent, relevant, and I think applicable to most of our business operators. And so there are things that are worth being aware of, considering, and if applicable, of course, to ensure that you do not overlook them as you plan to take on your tax returns come early next year. Early next year. So there has been quite a few provisions that are there for us as business people. Some have been existing for quite a while. A few were just introduced well recently. Others that were there before may have had some refinement, extensions, etc., etc. But all in all, we're saying that these are things that we must not overlook. So I promise you that over the next 10 or so business days, and hopefully we'll wrap up here all the mini sessions by the close of the year. So for the next 10 or so business days, we'll be featuring a particular topic, go into a little more details, and so hopefully you'd have all topics covered to empower you to go into 26 and just get your stuff done. All right. So thank you again for joining me. And I am thinking that we are all ready to roll. Well, today I'm going to be looking at what we call the 100% bonus depreciation, right? That's a 100% bonus depreciation. As business persons, individuals, we're accustomed to this whole concept of depreciation. Right? We all are, because when we take our funds and purchase these what we call capital items, whether it be equipment, furniture, motor vehicle, you name it. Okay, we invest these monies into our businesses, and then we have what we call our year of operation, and the year's operation carries with it operating expenses, which are your normal supplies, payroll, utilities, etc., etc. So these are real monies that you pay out of bank account. So you can actually see them as tangible cash expenses. In addition to those, we would have now made some major capital expenditure, which is to buy the equipment, the truck, etc., etc. And as a benefit to us, we are allowed to depreciate, to take a certain amount or a certain portion of the cost of these capital expenditure and apply them as write-off in that given year. That gives us additional benefits of a tax write-off or a deduction through the depreciation. Good. So that's depreciation. We're all aware of that. Usually, depending on the type of asset, the class of asset, etc., then it usually have what we call a useful life. And this well, let me not even say useful life, because normally we talk about useful life in the strict context of accounting convention, which may not necessarily be the same thing as tax life. Okay, so the life of an asset, or the period over which it can be depreciated, is normally referred to as the tax life. So depending on the type of equipment, you'll be allowed X number of years over which you can write it off. Now here comes the good news. We have what we call the 100% bonus depreciation provision. And this is definitely a major tax incentive, meaning that instead of you spreading the cost over X number of years, you are now allowed to immediately deduct the full cost of this acquisition once it fall in the eligibility category, right? And we would have heard about this July this year enactment of the One Big Beautiful bill, which has number of provisions. This is one of such. So what are some of the details of this 100% bonus depreciation? Basically, it is saying that you buy something on it, a qualifying asset for $30,000. So you're able now to say, okay, I will now write off the full $30,000 against my 2025 tax returns, So no, there are some conditions, like everything else in taxes. There are some strict considerations. Very important to note, this acquisition or this purchase must have been done and the item put in service after January 19th of 2025. After January 19th of 2025, you have purchased and put this item, this equipment, this machinery, this truck into your business, into operation, and that is how you would then be able to benefit or to take advantage of this 100% bonus depreciation. Okay, so it would have to be after January 19th, and I think you're able to go as far as up to sometime, well, maybe 2029 also, but at least for the year 2025, you need to bear in mind that it must be something that you acquired and put into your business after January 19th of the year. And as we said before, you have machinery, you have equipment, you have furniture, computers, some different type of vehicle, like your heavy trucks and your SUVs, which must be over 6,000 pounds weight. And so you have all these things that once you buy, then you're able to do this. Now the process, how does it work? Straightforward. You buy your asset, you enter it into your financial statement, you record it as a normal asset in a normal way because you want to recognize it, okay? And so you recognize it, but we're saying that, just using the $30,000 again, we're saying that you enter it into your books at $30,000 acquisition cost, and you are able to write it off right away, okay? So it's referred to as another name for it is to say it is an accelerated deduction. So spreading it out, you upfront it in the year, possibly 2025, and you're able to get a full deduction in the current year against your taxable income. Now, you would recall, and we'll talk about that on another session, you will recall the provision of Section 179 expensing, right? Which has a limit. There's a limit to this provision. The Section 179 deduction or expensing, it has a limit. Now, unlike the Section 179 deduction limit, this 100% bonus depreciation has no such limitation. That is very, very good. No such limitation. You can write off the full figure right off the bat. And the beauty about it also is that in addition to you utilizing this 100% bonus depreciation for the qualifying asset that you purchased, you can double that up by still utilizing or still benefiting from your Section 179 deductions that is available to you. So it's not one or the next. You can get your 100% bonus depreciation. We can always couple that up with your Section 179 deduction there. So that is a very, very, very good benefit to jump onto once you qualify for that. I would just make one quick observation that this is a provision that you are allowed to utilize. But you may decide that I do not want to take this 100% bonus depreciation. I prefer to go the traditional way of just spreading the cost over X number of years. You may decide that you want to go there. Now, why would you do that? You would do that because you're thinking that in the future years, I can see myself having much more taxable income that will better benefit from the depreciation write-off as opposed to just taking everything in the first year or upfront. Now, the truth also is that if you should take the full 100% bonus depreciation and it causes you to end up with an operating loss because your income was not that much, and so by taking that full depreciation write-off, you end up in a negative. It is true that the loss can be carried forward. So the loss for a sole proprietor could be carried forward. The loss, if you're what we call your regular pass-through entities, then that will definitely flow over onto your personal, if you're a partnership or S corp, that loss will flow over onto your personal tax returns, and that will give you a tax benefit too. So there are many things that you need to consider. But the bottom line is that this is a provision that is there for you, and if you qualify, you should definitely consider it. Okay. Usually the devil is in the details. So if this is something that you're contemplating, then as I usually like to remind you, you need to, if you're comfortable addressing it on your own, keep it worry. But if you have any element of doubt, then my suggestion is always that you consult with your tax professional, whether you're CPA or tax attorney or whoever, your tax preparer, to ensure that you are doing things correctly. So that's about it for that aspect of it. Remember, we said we're doing 10 subtopics. This is the first of it, the 100% bonus depreciation, something to think about. And if you think it applies to you, then by all means, go for it. Talk to your tax preparer, your tax provider, your tax guy, your tax lady, and make sure that you get it correct. All right, so that's it for now. Today's Friday, so I guess the next time you see me should be sometime on Monday about the same 1 o'clock, where we will move on to the next subtopic in the series. As usual, to contact me, you will see my information streaming at the bottom of your screen. You can call or you can jump online and check us out from our website and be guided accordingly. And we're always available, ready to assist you and to ensure that you're guided in the right direction. So that's about it for now, and I'll see you sometime on Monday, there about 1 p.m. Bye for now, David saying over and out.